Critz from Salient Predictions, and he will be speaking on improving weather derivative trading with probabilistic subseasonal to seasonal forecasts.
Hi everyone, I'm Karl from Salient, and the question that we're going to be talking about today is, if you have a season ahead forecast that you can really believe in, then what kind of value can you realize out of weather derivatives markets by trading against those forecasts? And the answer is pretty good. So you can get a market level rate of return using that sort of data, especially on those season ahead timescales that we specialize in. So that's all you need to know. You can go home now if you want. To bring things back to what we do, so we are AI and ML seasonal, sub-seasonal, long-range weather forecasters. And one of the things that so all of that is very nice, but one of the first questions that anybody ever asks us when we're approaching a new client is, how good are your forecasts? We're very transparent about this. We have maps, we have a hindcast summary API, and that lets you generate charts like this that show you a continuous rank probability skill score versus your most likely comparisons from some of the national agencies. And that's all great, it's very transparent, but then the immediate next question is, so what, why should I care? Because a CRPSS score is not denominated in dollars or ROI percentages. So for us, one of the challenges is taking that sort of knowledge and running it through a theoretical exercise to calculate the value. So let's say you're in supply chain. Let's say you're floating a barge down the Mississippi. You want to know ahead of time, what are the water levels going to be? Because that has a direct impact on how much weight you can put on your barge. And you want to know that a season ahead. You can put a dollar value on that, but it takes quite a bit of assumptions and consultation. So we set out to answer the question in a very, very rigorous and narrow way that doesn't require any assumptions at all. And that is by looking at weather derivatives. So for those of you who are not familiar with the space, a heating degree day contract is something that over let's say 3 or 5 months, you take the average temperature each day, subtract 65, it's greater than 0, you just accumulate that over the course of the entire contract. And then at the end, the contract settles at whatever that accumulated HDD, CDD value is. Cooling degree days are the opposite, you just flip the sign. So these are available in multiple US cities. There's a slightly different calculation method for international cities. And it's all liquidly traded. So this is something that you can backtest against actual market prices. We really like this as compared to more liquid markets like power, oil, gas, because for those, you need a model that takes the weather inputs and translates it into the value of the asset. And there's some stuff in there that's completely not weather related. Somebody blows up an oil pipeline or a transmission line goes down. That's completely outside of the weather, but has a big impact on the price. So one of the really nice things about these weather derivative products is just, if you know the weather, you know the value of the instrument. And then another nice thing is that these are growing. These are not as big as FTRs or power trading, but they are growing and have been growing quite a bit in the last 2 years, which means you're starting to see more action, more trading, more liquidity in the market, and therefore there's more value to be had while you're there. So that's the question. What's the answer? The answer is yes. When you do this sort of trade, you do, on average, tend to see about a market 10% annualized rate of return. You'll see that some of these contracts settle with really nice returns. A couple of them have no action whatsoever, but there's just 0 ROI. And we're being transparent here, some of them do lose money. But on average, you do end up seeing a market advantage if you backtest against these instruments. So we are meteorologists and data scientists. We are not quants. So we worked with Beacon, a power trading or a commodities trading platform. They're real experts here. They've got the history, they've got the tools, and we worked with KWA Analytics, who helps integrate data into Beacon. So KWA took our data, integrated in there, ran the back tests. And what I'm going to show you now is what happens when you actually do these back tests. Or actually, no, first I'm going to show you the decision. So we use a very, very simple decision engine which just basically says on any given date, the Salient forecast has a certain probability distribution where we think this particular contract is going to settle out in a few weeks or months. And in the event that the current market close is below our 25th percentile threshold, we say buy, because we think the market is undervaluing this particular instrument. And if it's above the 75th percentile, you sell, because we think the market is overvalued it. So that is it. And we're making very idealized market assumptions just because we know that Heisenberg uncertainty, once you start trading in the market, you change it. But because this is in the past, we're assuming that we're not moving the market. We're assuming somebody will trade when we offer at the market price. So there are some assumptions here that are a little idealized, but that's kind of what you have to do on a backtest. So I'll show you a good example first. We'll start with the positive. So what you're seeing here is this gray blob in the middle is the interquartile range for the Salient forecast. So when we're in that area, that's the hold area where we think that the market has basically got the price of this instrument right, and so we're not going to sell or buy. In this particular case, this is a cooling degree contract in Dallas, and the Salient forecast thinks in general that the market is well below where we think this thing is going to go. So we start, and each day we just buy, because we think that the value of this instrument is going to go up, and lo and behold, it does. There is one little area in the middle where the market kind of corrects, get close to the Salient forecast. We're not taking any action there. But in the end, this ended up being a pretty good result for the Salient forecast. Sometimes, on the other hand, nothing happens. So that market price, right in the middle of our range, the Salient forecast thinks the market's doing a pretty good job valuing this asset, and there's no reason to trade, so we just hold. In the end, this entire thing ended up, this entire instrument ended up transacting. We never did anything about it, zero. And then this, for full transparency, this is what happens when things don't go as well. So throughout much of the history of this particular cooling degree contract in Las Vegas, the value is right inside the Salient interquartile range, not taking any action, but there is 4 weeks there where the market must have known something that we didn't, because the market's below our range. We bought when we really shouldn't have, and ended up selling at a value that's lower than what we initially bought it at. So this is an example of a loss. Not claiming that this is perfect. We play probabilities, and we give an edge. We don't give a crystal ball. So this is where I think the real value comes in, is in your trading window. So because we have a year-long prediction, that means we can trade with confidence well ahead of market close. And what we're seeing is that a lot of the really interesting return is happening in this subseasonal to seasonal range, 10 weeks to 30 weeks. And a lot of that, I'm guessing, is because a lot of the information isn't out there or isn't particularly trusted when it comes to S2S predictions. And this shows that if you do have something you can trust, there's opportunity. So what does all this mean? I'm speaking now as a researcher, not as a roadmap owner. So I don't know that these are actually going to happen, but these are opportunities. First of all, this study was done entirely in isolation. I'd really like to compare a similar methodology, similar decision to other weather providers to see, like, does Salient outperform some of these other weather providers when you're doing the same thing? The decision rules, as stated earlier, very crude. So we're not doing any hold time optimization. So I think that the more confident you get, the stronger a buy signal you could do. So there's more we could do there, make these a little less idealized. And then once we believe in this, I'd like to see what happens if we actually created a toy fund, turn this on and see what happened, because the history of quant trading is littered with the bodies of people who thought something back tested well, and then as soon as you turn it on, bad things happen to you. So I'd like to see what happens when this thing becomes real. And then also, if we've got a good methodology here, let's take this out to more products, because we predict also, we don't just predict temperatures, we don't just predict HTDs, we predict precip, sun, wind, and there are weather derivative products out there for those. So let's expand out the study and see how well those perform as well. So that there's a lot of interesting places we could go. So what does this mean? If you have an S2S forecast that you can trust, you can act on it, and you can gain value for that. especially out in that sub-seasonal to seasonal range. So I will give the last word, not to myself, but to somebody who is very well practiced in this area, who said just a couple weeks ago, the Engelhart Commodity Perspective said that as opposed to NWP, that's numerical weather prediction models, those are the deterministic national forecasts, AI's ability to operate in these longer timescales really creates some potential advantages, and it's an exciting place to be. Before I take questions, I have one last plug, which is I am looking to hire a geospatial data engineer. So if you know somebody who's really great with geospatial data, I would like them to join us. So tell your friends. And that is all. Thank you.